Of the London Session Open. Today is March 3rd, no, sorry, March 4th, 2020, and it's 10 minutes until 10 a.m. in London. We're going to do this quickly today. I'm going to try to wrap things up within the next 10 minutes. Stefan is in the chat box. If you guys want to join, just join in here and ask your questions. And he would like us to take a look at the dollar CAD. He says that it looks like a juicy short. We'll soon find out, and we'll take a look at that market for you. Now, let's take a look at the markets. And yesterday was a big event in the U.S. Because of the rate cut. So they did a rate cut. Now, the last time that happened was in 2008. So when I saw that, I was like, wow. Because I was watching the market already in 2008. I started to trade the markets in 2006. I'm like, wow, this is something special. Like, these guys are having panic right now, and they're cutting. They're not just cutting with 25 basis points. They're cutting with 50 basis points. And that, it can happen sometimes, but it's mostly like smaller banks like Sweden, for example, where I was born, where they would cut with 50 basis points, because those economies, they're smaller and they will see high growth and then very low growth, so things swing a bit more faster. Another good example is the New Zealand economy, where as well they cut with 50 basis points. In the US, traditionally they do 50 or 25 by 25 basis points, and they do it at the meetings. Now they cut quite a bit, and that should surely support the economy. The interest rate right now, I think it was between 1 to 125 basis points, whereas it was at 175 before. So that should definitely give a bit of a boost. And the difference now between the interest rates in Europe and US is not as high as before. Now, the market reacted weirdly. It didn't gain. And I think the reason why it didn't gain, if you look at the S&P 500, is that the market pushed upwards. Let me see here, let's hide it. The market was going down, up, down, and up. And remember, I said, look to buy down here. So if people that were already long, they were looking at this and said, okay, they don't want to be buying here. Let's wait for a corrective move. And that is what happens. In the case of Germany, we did have a little bit of a push to the upside, but that was pretty much it. And then before the end of the day, we reached that little buy spot that we talked about yesterday. So if you did buy here, you should be up now. The market itself is up with 2.5%. And if you didn't buy and it comes down again, I still think people are going to be buying. Now, has the coronavirus blown over? Definitely not. I still think we're going to have more problems. Last week, on Wednesday morning, we had 322 cases in Italy. Now we have about 2,500. Today, in France and Germany, we have about 200. So, not the same as 322. Maybe we'll be at 322 maybe by the end of today, maybe tomorrow. But the way things is looking right now, and I have not investigated the growth rates of Germany and of France, but by the looks of it, we are where Italy was last week. And so I think what's going to happen is that we'll have more panic in these countries, and we have a sharp rise there. But that doesn't stop, for example, the German DAX going up to 12,800, 13,200, and then rolling over here. That would not surprise me. So that is what I'm looking for. But for now, technically, you got the rate cut. Well, I mean, what more can you ask for? It's a good boost to the system. And as long as you trade above the August low, I'm going to continue to be bullish. Now, if you did buy, what you're looking for now, you're looking for that break to the upside to lift this a little bit higher. And what do I think about the situation in Italy? Well, if it increases the way it's doing right now, there's going to be probably some 10,000 affected people in the next week. We've done this before. Live webcam Milan. We load this one, and you can see it's busy. It's busy like London. Not actually, London is more busier, but it's busy. And yeah, so I think the way this looks like now, we'll have more cases. And I think the problem is going to be when there's 10,000 in each country and people start dying, and then people get upset and they're going to tell the politicians, why did you not close the borders? Why didn't you do that? Why don't you quarantine? And then people gonna say, then they're gonna say, all right, well, let's quarantine. And then when they quarantine, that is when we could potentially see or should see a slowdown in the economy, because people are going to be afraid, so they're not going to be consuming, they're not going to go and buy new cars, new refrigerators and stuff like that. They're just going to buy a lot of pasta, probably a lot of potatoes and a lot of rice, as they did in Milan last 2 weekends ago. So we'll see what happens. I hope I'm totally wrong. If I'm totally wrong, the buy idea here would be an even a better one, because we might be moving up towards the high again. Now, if I'm totally wrong, we don't go upwards and people start to panic way before that. Well, if we take out the August low here, I think we'll trade down to 11,262, and then we'll go down to the next level, which is 10,851. And in the case of the S&P 500, the idea here was to sell yesterday, and the idea was to sell here if you were really bearish. The trend and funding level was up here. I have now put it down here to 3140. That is the level I'm looking at. We did decline a bit. I think the German DAX and all thing can go upwards, so I think this well can go upwards. The CNN Fear and Greed Index is a rock bottom as well, so I do think stock markets can go up again. But from a purely technical perspective, the trend is bearish. If you sold here, hopefully you booked a little bit of profits, and if it's gone up here, I think people are going to sell again. But you need to be ready for this. When and if we take out something like 3140, at that point, we will probably have concluded this downtrend, guys. And if we take out 3140, we're probably going to go up to 3262. And we're going to be in a situation where, like this one here, where the market declined a lot, and then went up a lot, and then went down, and then went up. When we take out that high here, the trend turned bullish and went upwards. The same thing could potentially happen here. Now, we can also just quickly see this on Twitter. It's super interesting, but every man and his dog is telling you that you should be super worried. Where were these guys when we were up here? There were a few guys that have been bearish, but they've been bearish forever. They've been bearish on the way up here now, and then forever. And yeah, they were right at the end. Like, even a broken watch is right 2 times a day, right? But what is interesting is you have people that are not really that worried, that didn't tell you to sell stocks, but now in the beginning of the week, they're telling you you should sell your stock, you should stock up, you should create a bunker, you should just hide. And yeah, they might be right, but I wouldn't take advice for them when it comes down to stock market trading. Remember, we were bullish, but I got stopped out up here. That is the last bullish idea. Actually, it's here. That is the last bullish idea, and then the whole thing just went down. And then if you manage it correctly, you did buy maybe somewhere down here, and you managed to get some profit on the back of this decline. All right, let's take a look now at crude oil markets. Then we're going to take a look at Forex. So crude oil markets from a daily downtrend or daily chart remains in a downtrend. You can see we going down lower. Now we're pretty much here looking at the breakup point. From here down here, it was a 10% slide. And now we're going upwards. And I think at this little spot, I think we can be bearish. I think we can, in fact, reduce the trend of funding level a tiny bit like that. I'm not super enthusiastic though, but I will remain bearish below 50.64. And I think we can go down to the bottom, and then we'll see if we're going to go much lower. From a bigger picture perspective, we do have that break to this big pattern, which has a target at 37.29. But just look at crude. It's not an easy market to trade. It goes down a lot, goes up a lot, goes down a lot, it goes up a lot. It's just sometimes where it goes and does something like this. Gold prices. So gold prices had a nice little push to the upside. Now, what I wanted to do yesterday, if you remember, I said, let this go down so we can buy it at close to the lows here. And then we missed that out. So what I've done now is I pushed up the buy spot to 1,604. And between that level and this level, I think people are going to be buying. Could it just go straight upwards? Of course it can, if we have more panic. If not, I think we're going to drift a little bit lower. I think at least in the short term, we can easily go down to 1620. And then it's probably going to be a bit of a struggle to reach the 1,600. And that's what I want. I want price to go down, reach my buy spot, and then quickly bounce to the upside. Now let's take a look at currencies. So what did we say yesterday? Well, yesterday we said buy here for this to go upwards. The market did bounce from this level and it did go upwards, and that's because of the rate cut. Now, if you fast forward now, so the cut with 50 basis points, are they going to cut with another 25 at the next meeting? They might cut with another 25 at the next meeting. I don't think they will do that though. Look at the New Zealand Central Bank. At one point, the cut with 50 basis points, and then said, all right, we did the cut. We did the cut before you even anticipated it. And now enjoy its benefits. And the benefits should hopefully be visible 9 months later in the data, because that's how long time it takes for a rate cut to be felt throughout the economy. And so I don't think necessarily they're going to be very, very bearish. On the other hand, if you take a look, ECB is sitting there. They have a ton of cases just under their noses. And the pressure, I think, is going to be on them to cut. So that is, from a fundamental point of view, that is what I will be looking at next. But for now, technically, the trend remains bullish about 110.76. And if we go down to 111.18, I think people are going to buy again, and I think we're going to go to the upside. But as soon as we take out this, we're probably going to go lower. As well, if you look at this from a big picture perspective, the market is close to these highs. It has rallied up by some 430 pip with no real resistance. According to this chart, there's not a single bearish day here since February 21st, which when I think when this rolls over, it might take a little bit of time, but I think eventually we're going to go down again. If we just take a step back, the big picture trend is bearish for now. And I think we can easily have a bit of a correction to 110, maybe 109, and then we'll see, because it might be forming some inverse head and shoulders. I reckon though it's not doing that. I think we could, but it could be maybe doing something like this, maybe down and then like that. However, I think it's going to be down and then like that. So I think we're going to do something like that. That's my main scenario for the next few months. But you need to understand as well, we are short-term bullish here. And if we do take out that high here from 112 or so, then this will be the next level. And that's 114.22. Okay, let's see if we can answer some quick questions. Actually, I'm forgetting GBP USD. Sorry about that. GBP USD. So the idea was to sell at 128.43. That worked out well. The market is to our advantage. If it does swing to the upside, I do think people are going to sell again. Then we're going to push lower again. 129.22 is the trend defining level. So push that down a little bit. When and if we take out this level, trend defining level is going to go here, and you will have a risk of 1 or 2 pips at that point. Dollar versus the Japanese yen is very, very close to this low here, from which is the October low, because I do think stock markets can go up. As I said yesterday, this could be the opportunity to get involved. However, I would rather hold a position in the DAX, Spanish stock market, or US stock markets than buying dollar yen, because the dollar yen, it gives us bullish breakouts, false bearish breakdowns, bullish, bearish. It gives us so many false signals since pretty much October of last year that my trust in it is very, very low. Okay, let's see if we can ask some questions. So we got a question about the dollar CAD. So we'll take a look at the dollar CAD. We got Maurizio. Good morning to you, sir. Hope you're doing good. And Vipul asked about the Euro USD, which we covered. And then we got a question about dollar CAD. And then we got a question about Aussie dollar and New Zealand dollar. So we're going to cover the Aussie dollar. And we're going to cover the CAD. The Euro we already covered. So let's take a look at the CAD. So this is the Canadian dollar. And the Canadian dollar was in a nice little channel that was like this. Something like that. But now it took out that channel and traded to the upside. And the reason for that is because crude oil prices slid as much as they did. Now technically here on the daily, you had a very nice bullish candle on February 26th. And I was bearish up until that day. On that day, I turned bullish. And I've been telling people to buy on dips, and I'm sticking with that for now. I don't have a strong view on what's going to happen in Canada, unfortunately. I have not had time to check that out. But I can tell you that technically 132.50, that is the level where I will be bullish from. We got a question as well about the Aussie dollar, and look and behold, I'm actually bullish here. I was bearish up until yesterday. I have been bearish from here when we took out these levels in January 23rd, and throughout January 23rd, I've been bearish up until yesterday when the price took out my trend finding level. This is very striking. They cut rates and the currency goes upwards. Why is it like that? Because the rate cut was priced in. I think that is the reason. And then you have stock markets being a bit bullish. So the trend is bullish above 65.58, and I'm not sure we're going to go down there. But if we go down there, I think people are going to buy. Then we go a little bit higher, 66.50, maybe even up to 67. But then look at this from a big picture perspective. This is the 2019 low here, and I will be very surprised if we trade much higher than something like if we go back above that level. I would be very surprised, because I think we'll go up a bit, and then the economy in China is still going to be weak, and that's going to affect the Australian economy. So they're going to go up a bit, and they're probably going to go lower again, because I do think we are heading towards the 2009 low here. Okay, guys, we're going to wrap things up. I want to thank you so much for joining me this morning, and I want to welcome you guys to join me tomorrow, same time, here at 9:45 a.m. London time. The best thing to do is that you subscribe to the channel. It looks like this when you are not signed in. So you subscribe here, and then there's going to be a little bell button. If you do that little bell button, what's going to happen is that you get notifications. You can adjust that. You get emails, but most of the time you just get a little notification from YouTube that we are live. I can't find the notification now, but you'll get that notification as well. The other thing to do is to follow me on Twitter. That will be at Alex. Let's see if I can find you the actual link. I will always, as I have for the last few years, been sharing when I go live. So check that out. Guys, thank you so much for joining me. Thank you so much for all the questions. Have a great trading day, and I'll see you guys tomorrow. We do have more education as well, and more training if you're interested in this. And this is a bit of a preview of some of the premium stuff that we do. If you have more questions, you'll find my contact details via the Twitter, also at info@investingcube.com. Have a great day, and I'll see you guys tomorrow.